to show each other how we can be able to trade technical analysis. The reason why we choose technical analysis today, it's actually because of it's one of the things that a lot of traders, they actually use to trade. So most of the traders, they actually use technical analysis. So I think it's way much more better to start with a technical analysis and to share each other. Although we don't have enough time today, as usual, the presentation is recorded. A PDF can be sent on Monday. If you ask about it, there won't be any challenge. So let me just get into it quickly. If you do have a questions or you have a comment, you want to comment, please, ladies and gentlemen, you can type on the chat and be able to, I'll be able to answer or be able to discuss about whatever it is at the moment. All right. So just a little bit of a briefly regarding the technical analysis before we get into the chart itself. In this section, we are actually presenting the current forex market view, including the forecast of all major currencies. That's what we're gonna check on a market, on a chart. The main analysis approach is the technical analysis, even though other principles will be used, from time to time, everything to make the market analysis accurate as possible. So what it means is that although we only participate or only focus as much as on a technical analysis, doesn't mean we should abandon other type of trading strategies or other type of a trading style, because of all of those. When we combine it together, it brings the proper strategy to actually trade. Same as the video that you see, when you combine the risk, maximum drawdown, and again, a trade analysis, that brings you the whole risk analysis at the time when you are trading. So you're not based on one thing, but we are focusing currently on one thing. Remember, when you are trading, you're going to be able to trade whether with the technical and fundamental combined. The technical analysis is the way of predicting the future forex market movement based on the previous market movement patterns and the trends. From a technical analysis viewpoint, all fundamental aspects are already part of the previous market movement and therefore needs to the special consideration. So what it actually tells us that most of the technical analysis, when we analyze it, it's actually based on the past history, the past trade that has been doing before that present. So it might be 2 weeks ago, it might be 1 month ago, it might be 3 days ago. So you analyze your chart, your future movement based on the past movement. That's what we're talking about when it comes to technical analysis. Now, the movement of the trade, they say the fundamentals are already there. Because in order the market to actually drive, it's been driven by the fundamentals. So the fundamentals are already there. You just need to know when the bigger fundamental news are happening at that particular time. But all the time, what we actually use is mostly the technical analysis to make sure that we know the future movement, where exactly the market is actually going at that particular time. All right. So remember, if there will be any question, let me know. So just a busy new week. I wanted just to go through just a little bit of a chart on focus on the GBP, USD, and FTSE 100. So on Friday the 13th was indeed an unlucky data for markets. Every major US stocks indexes posted down a week, making the run of the 6 red weekly candlesticks, and again gold all grounded over the 5 trading days. Cryptocurrencies also, they were moving, took the biggest hit with the BTC to 11.48%. Ethereum the same. If you go on a chart right now, you see Bitcoin has been dropped. It actually dropped from to 11.48%, including the Ethereum as well. Is there a question? All right, let me mute. Okay. All right. So even the price of crude oil soft needed over the last week, but that still trades well over the $100 per barrel. Remember, the oil was all the way to the $100 per barrel. it actually, go all the way up to reaches to, 110, per bello, all the way to 109 per bello. So those are the things that you need to know when you are actually trading in a market, that how much is oil is doing at particular time, because of oil itself, it drives most of the instrument that you see them in a market, right? In order people to buy food, oil is involved. In order, the companies to produce the products, oil is involved. So oil is one of the major instruments that we need to check time to time to determine what we want to trade at that particular time, right? Okay. All right. So this is just a little arrangement on a Tuesdays at the 17th of May. There was UK unemployment rate. That was Tuesday. Wednesday, the 18th of May, there was UK consumer price index. There was UK retail price index. Friday, the 19th of May, I think Friday, yeah, there's UK GFK consumer price. There's also UK retail sale index. These are one of the stuff that actually drive the market as well, so that you can be able for you to trade. So I wanted also to check on the indices before we go deeper to the technical analysis. The NASDAQ itself, the first hand confirmation that teaches the stock might still be the overvalue, right? Was provided by the Elon Musk last week. We remember when Elon Musk last week actually, buy Twitter, the majority of shareholders in Twitter, and that actually drives the NASDAQ itself. That is why Elon Musk is being involved when we are talking about NASDAQ at the particular time, at the present. After previously offering to buy a Twitter Inc. for $54.20 million per share, and also promising to unlock the potential of the social media platform. He was threatening to walk away from the deadly deal by the end of the last week, and eventually he got the deal. He's actually one of the guys that is owning the Twitter at the particular time. So without the support of the buyout offer of the Twitter stock, finishing the week trading with a few cents above $40 per price. So Twitter itself also, if you're a type of person who trades stocks in a stock market, you could have seen the Twitter raising up to actually, $40 per price level. The lows they were recorded over the traded week was 2.37%, but the highs intraday week of 1168 recorded on Thursday, being some of the off Friday closing price of 12,359. Pretty much right now, the NASDAQ is sitting around 12,300, somewhere around there. So it's been dropping. This is just the market analysis about NASDAQ, how NASDAQ is actually, looking. Here is the chart. It's a US Tech 100 cash. That's NASDAQ. If you see wherever it says US Tech, you must know it's NASDAQ. All right. So these are the analysis showing you that in the past week, where we could have been able to do the long trades at a 12,211, the price target was a 12,944. The price target again, we wanted, because it's a long trade, we wanted to go all the way at a 13,705, right? To see if it's gonna get to 13,705 because of a 50 SMIA on a daily price chart. The stop loss were put it on the 12,000 if you were trading the long trade from the, the whole week, or if you actually want to plan for the next day. So we're going to look at it on a NASDAQ on a chart so that we can see this 12,000 where it is, this 13,000 where it is, this 12,944 where exactly it is. So this is also the GBP. All right. So now we are back on understanding the technical analysis. All right, ladies and gentlemen, before I go further, any question? Okay. All right, no problem. So the technical analysis is the study of a historical price action in order to identify the patterns and determine the probability of the future movement, as I said. In the market, through the use of the technology study, the technical studies, indicators, and as well as other, analysis tools. So the technical analysis boils down to the two things: identify the trend, identify support and resistance through the use of the price chart and or the time frame. So if you understand these two things, you're done with the technical analysis. If you understand the trend, where the market is going, and understand and identify the support and your resistance level, you're done. You can be able to be a day trader and be able to trade a technical analysis without a challenge. Okay. All right. Markets can only do three things. Market can only move upwards, or can move downwards, or they can move sideways. I know people, they're gonna get confused with how does it move sideways. All right. So the market can shoot up as a trend, or it can have a downtrend, all the way the trend going all the way down, right? Or it can have the sideways trend. So these are the sideways way: go up, go down, go up, go down, go up. Those are called the sideways trend, because the market at that particular time, it hasn't decided yet where it want to go or which trade it want to take, right? All right. So the price typically move in a season fashion, and as a result, the price action has only two states: range. The price action can only range when the price is zing zang sideways, right? The zing 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 zing, that's a range. Then trend. So we talk about, remember guys, we are talking about technical analysis. To identify to understand the technical analysis, you need to understand two things. You need to identify the trend, and you need to identify support and the resistance, right? Again, to understand the technical analysis, you need to understand the price typically moves, the price action movement, right? So the price action movement can only move on a range, number one, or it can move on a trend. Those are two things, four things that you need to understand when it comes to technical analysis. Once you've done that, you're good. You can make money each and every single time. You can see when you are losing money. You know, it's not fair when you're losing money and you don't understand why you are actually losing money, right? Why the trade goes against you. But it's better to, to lose money in the market and be able to understand why the trade, it actually, go against you. Any questions so far? All right. Sorry, I'm keeping moving up and down because I'm live. I'm actually, always be live on Instagram and again live on YouTube, so that everyone can be able to understand. All right, Mr. Bright, no problem. Let's move on. All right. So pretty much it's just a simple a chart that tells you a downtrend. This is a trend when we're talking about the trend, right? This is the range. This is the sideways. Tells you the market only move three ways: downtrend, upper trend, and the sideways. This is a sideways, right? When we're talking about ranging, this is what we are talking about, that the market is currently actually ranging at that particular time. This is the upper trend. All right. How can you use a technical analysis in a market? The technical analysis is actually based on the theory that the market are actually chaotic. No one knows for sure what will happen next. But at the same time, the price action is not completely random. In other words, a mathematically chosen theory proves that within a state of a choice, there are identifiable patterns that a trade to repeat itself. So of course, we are not going to know what the market is going to happen, after when you are executing the trade, but we must always understand by using, because the whole forex market is actually coming from the mathematical theories. or scientific theories. It actually built from that thing. That is why you can find there's indicators like Fibonacci indicators. There's indicator like Ichimoku indicators, the indicator that are being created by mathematicians or by the scientists to make sure, but they do that based on the mathematical theory. So each and every mathematical theory, it always repeats itself. The numbers don't lie. So whatever numbers pass by, it will eventually pass by that. The only challenge is that how much money, how much margin you have in your account to hold enough to wait until it actually get to that level. That's the only challenge. But anyway, all right. The part of determining probabilities involve the forecast market direction and when way to enter into the position. By equally important is determine your risk to reward ratio. I'm sure you heard about risk to reward ratios. It's understanding how much you are exposing in your account and how much you can actually get from your account. All right. So just because we talk about trends, right? The different, the upper trend and lower trend, another words that they use, another terminology, it's a bullish movement and a bearish movement. So that's why I wanted to jump in also talk about a little bit of bullish and bearish movement. Then we can get back on a chart. All right. So pretty much the bullish and the bearish flags. The bullish flags are formation occur when the slope of the channel connecting a highs and the lowers of consolidating a price after significant moves upper in a parallel and declining. The trend before the flag must be up. The bearish flags, vice versa, the formation occur when the slope of the channel connecting the highs and the lower of the consolidation price after significant move down in a parallel or and rising. The trend before the flag must be down. All right, so the other one, the trend can be up. The bearish, the trend can be down. So you know what, ladies and gentlemen, let's not waste more time. Any question? Let me know. Let me jump into the market. All right. So I want you guys to tell me which instrument should we try on as a technical analysis at the moment and follow the instruction of what we hear or what we say on that, a theory of technical analysis, on that practical of technical analysis. So give me the instrument, GBP USD. Okay, cool. Let's get into GBP USD. Is that what you are trading at the moment? One man. Where's the GBP chief? GBP USD, GBP odd, GBP Australian dollar. Oh, gold. Oh, you're trading gold, my man. That's good. The safe haven. It's called the safe haven. That's gold. Oh my gosh, ladies and gentlemen, it's gonna cut in 10 minutes. When it's cut, without finishing, let's rejoin again to finish up. But maybe this last 10 minutes, we can go through the chart. And Nasdaq is dropping, my brother. Can you see it? It's a problem. GBP NZ. Why this thing is far? GBP ZAR. Hey man. I can't find that GBP USD, my man. What else can we check it out?
Yusuf, it's right there at the top.
Oh, did you see it?
Right there at the top. There you are.
Oh, this
is
is
from the top.
USD chef. I only see USD chef. I don't know.
USD GPY, there it is.
USD GPY. Oh, you want USD GPY?
Oh, isn't it the one that you're looking for? Sorry.
They said GBP, GBP, JP, yeah, GBP USD, but it's fine. We can always do the USD JPY as well, and we can try also another instrument. All right, ladies and gentlemen, this is United States dollar versus the Japanese yen, right? So remember, again, everything that is moving on a chart is because of the fundamentals. It's because of the currency of the United States and the currency of the Japan, right? It actually drives it for it to move like this. But we want to know technically what movement can we take? Where can we go? Are you with me? So what do we do? Most important is to start identifying the trend. Remember, when you are doing the technical analysis, the two things, most important thing, number one, identify the trend. Number two, identify the support and the resistance. Very simple thing. If you learn this thing today, you keep on practicing it over and over and over again, you will see the difference of your trades. Simple mathematics, right? Now, let's see the trend. In order you to identify the trend, you need also to go from the bigger range to the smaller range, right? So if you want to know how much, for example, people who run, like Akani Simbini, how much he runs per kilometers, you know, how in terms of the speed, you have to calculate the distance, the wideness, so that to understand how much does this guy, you know, run. Or you send boat, for example, calculate the distance. That's why there's meters, the 500 meters run, 200 meters, 100 meters run. Same thing, same theory. We want to know the range. We want to know the trend, where exactly the market it's going or is been coming from, right? As we said, that it's based on the past history. So we need to go a bigger range, bigger range. When we talk about bigger range, we must think time frame, right? The only thing that ranges, that extend the chart to see a bigger chart is the bigger time frame. So this is the time frames. To those who don't know, 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly, and monthly, right? People who do weekly and monthly, they must be the long traders, the guys that they can leave the trade for a couple of days. But most of the guys that we are dealing with these days, they are the day traders. Everyone want to be the day trader. You want to trade during the day, then you close, then you're done. You know, come back tomorrow, you do the same thing. All right. So we go to a bigger time frame. We are checking on a 4 hour time frame, first of all, right? Or maybe let's start on a daily time frame. Let's leave weekly and monthly, right? So on a daily time frame, look at it from this side is from the 13th Jan. It was ranging. This is what we were calling ranging, because it didn't shoot up or shoot down. It didn't show any trend. It was just playing around at the same position over and over again for quite some time, from the 13th Jan to pretty much March, on the 10th March. That's where it started giving the movement, a buyer movement, the upper trend movement. So here's the upper trend movement all the way, again, 21st April, right? All the way to a 3 of May. It's been ranging. But doesn't mean you cannot trade when it's ranging, you have to leave for the whole day. No. If we go look on a range, you're gonna notice that you can be able also to trade during the range time. So here's the ranging. Now it start now forming the down trade, right? So by just looking, these are the line, guys. Don't worry about this. When you press this thing, you're not gonna destroy anything, or you're not gonna, execute a trade, because people, they are afraid of clicking around the MT4. They think whatever they click, they are blowing their account. These are just lines. So I'm trying to click one line to show you where it was on the 28th Feb. And again, clicking another line, show you where it turns from a bullish trade, right? Now, here's the trade. It's actually coming all the way down. So now we have an idea that, okay, it might happen that the trend of this trade of USD JPY, it's now changing. It's now falling, right? But we are the day trader. We cannot trade it only during the day. It's huge. What it means is that another candlestick is going to form after a day. Another candlestick, it will form after the day. So each and every candlestick, there are days. These are days. All of these are days. One day, one day, one day, one day, all of those stuff, right? So that's too much for us as a day trader. But we are going far so that we can see where exactly the market is coming from and where it wants to go. So we go back a little bit to 4 hour, right? Here it is. Look at it when we check on a 4 hour, it tells us that it's actually, you know, a lower trend. This is the toppest, the highest of the of this trade at 138.244. That was the highest, and now it's been forming the down trade, right? Since it hits this price, the trade never go back and hit this price again. Never. It's been on a down trade all the way. Now we are confirming now that, in fact, this is actually a down trend, you know? So let's jump again to 1 hour. Let's see what an hour is telling us. All right, so this is where we can trade from 1 hour, 30 minutes, and 15 minutes. A daily trader, we can be able to trade this. Now, you see it's different. It's no longer showing you a downtrend, but if you look at it, it's always a downtrend. Since it's been coming all the way down, it never hit the highest. All right, so let's go back to 4 hour, for example. Now we understand that that's the downtrend. The second thing that we need to understand, it's actually, okay, we understand two things now. We understand that the market is coming from a downtrend. It goes to upper trend, reaches the highest. Now it's coming to the lower trend, right? Now the trick is part 2. We need to understand support and the resistance. The number 1 we already tick. Now we need to understand the support and the resistance. Again, we want a bigger time frame, right? This is the highest that the market has been reaches. In fact, that's the one. Highest that market has been actually reached in a very long time, right? So we want to know, where can we go? Where can we be able, you know, to turn? Where can we take profit and so on? So we come to a second highest. Where's the second highest? All right, first of all, before a second highest, we come to the range. Where did the market range? All right, insert shape, we're putting the shape. This is the way market, it was actually, you know, ranging.